All right, we're going to get right into a story today that it connects a really tragic event with what could be a massive investment opportunity. And honestly, it might change how you look at the silver market for good. So I want you to focus on one number, just one. And that number is 10. We're talking about 10 people, 10 fathers, maybe 10 sons, who are missing as we speak. And look, these weren't just random workers. We're talking about skilled professionals, geologists, engineers, the very people who make modern silver mining even possible. They went to work in Sinaloa, Mexico, and they just never came home. Vanished. And the silence since then? It's been absolutely deafening.
So what has the silver industry said? The companies that profit from their work? Absolutely nothing. Not a word. No press releases, no calls for an investigation. Just crickets. And that silence, well, it speaks volumes, doesn't it?
I know, that's a tough thing to even think about. But here's where the story takes a sharp turn into the world of finance. Because while all this is happening, something else is brewing in the markets. A huge disconnect that's creating what could be an incredible opportunity for investors who are paying attention. Okay, so what's the big deal financially? It all comes down to this. The silver miners to silver ratio is scraping the bottom of the barrel. It's at one of its lowest points in history. Basically, even as the price of physical silver has shot through the roof, the stocks of the companies digging it out of the ground, they've been left in the dust. And that gap right there, that's the opportunity we're talking about. Think about it like this. The market right now is looking at these mining companies and valuing their stocks as if silver is still maybe 30, 40 bucks an ounce. But the reality, silver has been spiking, pushing way past that, heading towards record highs. So you've got stock prices based on the past and a metal price screaming about the future. That disconnect is massive. So you're probably asking, how on earth do these two things connect? The missing workers and these undervalued stocks? Well, they're linked by a really powerful financial concept, one that can make investors a fortune, but it also has a pretty dark side. It's called operating leverage. Sounds complicated, but the idea is simple. It's when a small change in your revenue, like the price of silver going up a little, causes a much, much bigger change in your profits. For commodity producers like silver miners, this is basically the rocket fuel for their stock price. Okay, let's break down the numbers, because this is where you really see the magic. Check out this table. In both scenarios, let's say it costs the company 17 bucks to get 1 ounce of silver out of the ground. That cost is fixed. So in scenario A, the silver price is $36. You subtract the cost, and you've got a $19 profit. Simple enough. But now, watch what happens in scenario B. The price of silver nearly doubled, right, from 36 to 71. But look at the profit. It didn't double. It almost tripled, jumping from $19 all the way to $54. That is operating leverage in action. Every single dollar the silver price goes up above that fixed $17 cost is pure, supercharged profit hitting the bottom line. But, and this is a huge but, that same incredible leverage creates some really twisted incentives. Think about it. The financial pressure to keep those mines running is immense. A single day of shutdown could mean millions in lost profit. So what does that lead to? Well, it creates a powerful motivation to downplay security risks, to keep quiet about incidents, all to avoid a shutdown. Suddenly, workers' safety can start to look like an obstacle to maximizing that cash flow. Okay, so let's zoom out for a second, because this pressure cooker isn't just happening at the mines. This whole situation is playing out against a macro backdrop of, well, let's call it fiscal insanity. And it's what's driving this mad dash into precious metals. You might have heard about this. The U.S. government announced Project Vault, a $12 billion plan to stockpile strategic minerals. Sounds big, right? $12 billion. It's supposed to make you feel like they have a plan. But hold on, $12 billion compared to this number, $39 trillion. That's the U.S. national debt. $12 billion isn't just a drop in the bucket. It's like a single molecule of water in the entire ocean. The scale is just mind-boggling. To put it in perspective, that entire $12 billion Project Vault is about what we pay in interest on the national debt every 3 days. We spend $4 billion a day just on interest. So this big strategic project, it's literally a 3-day interest payment. It's not a serious plan. It's a smokescreen for a system that is fundamentally broken. And this is exactly why people are flooding into hard assets like gold and silver. It's not complicated. When the paper money system is built on a mountain of debt that is mathematically impossible to repay, you look for something real. You look for assets that can't be printed into oblivion. Okay, so this all brings us right back to you, the investor. You're looking at this market, you see the massive potential, but you also see the insane volatility, and you've got a choice to make.
So what's the play? Well, it really boils down to this. You can go with physical silver. You hold it, it's yours, no counterparty risk, which just means you're not relying on a CEO or a board of directors to do their job. You just own the metal. Or you can go for the mining stocks. This is where you get that explosive operating leverage we talked about. But it comes with a whole host of other risks, like, say, operating a mine in a dangerous part of the world. The potential upside? Way bigger. 3 times, maybe more.
See, for those mining stocks to really pay off, you need a few things to go right. Yeah, you need silver prices to stay high, obviously. But just as important, you need these companies to actually execute, to run their mines without major disruptions. And that absolutely includes managing security in high-risk places like Mexico. Because if your mine gets shut down, all that amazing operating leverage, it just vanishes. And that brings us full circle. That silence we started with about the 10 missing workers, it's not just a moral failure. From a cold, hard investor's perspective, it's a massive red flag. It's a business risk. Because a company that stays silent on something this serious, well, you have to wonder what else they're not telling you. It's a direct threat to the very profits you're hoping to make.
So this leaves us with one final thought, a question for you to chew on as you look at this market. Does knowing about the human cost, the dark side of getting this metal out of the ground, change how you think about your investment? Because at the end of the day, we're not just investing in numbers. Our money has an impact, and it's worth asking if that changes the equation for you.